Good morning, and this is your crypto day morning. Today's date that comes in that of Sunday, the 24th of March, 2019. My name is Derek, and in case you were wondering, and I know a lot of you probably weren't, that it was back in the summer of 2012 when the S&P 500 lifted off from $1,300, and it was then in November of the next year, about a year and change later, that it went from 1300 to 1800. It also took the S&P 500 over 7 years for it to make a 260% increase in price from this low till a point where it got to 2000. Again, in case you were wondering. In the 1990s, it took about 7 years for a 3.6 gain, or a 3.6x gain, or 260% move. Although a little less than that, it was able to accomplish that feat in a little less than 5 years. But this is the crypto day morning, and let's talk about such. Bitcoin, well, it's still doing its same very low, volatile, hanging in there kind of moves. Let's talk about volatility. Let's talk about ApeCoin. And another one of these moves, let's scroll it up to the 15-minute time frame and analyze the moves in just a little bit. It took ApeCoin to go from 1300 to 1800. How long? Well, it did so here at the 5:45 candle, and it got up there at the 7 o'clock. So it took about an hour and a quarter, hour and a half for ApeCoin to go up from a 13 handle to an 18 handle level. So all the time it took for you to gain on the S&P 500 back in the days to gain those percentile points, you're able to do it in that period of time. And let's just look at the size of these percentile moves in here. This little small green candle here, 2.62%. The next one is up 19.6, and then down 3, up 5, down 3, plus 3.5. These are weekly moves on the S&P 500 when you're up and down 3.5%. Down 10%, that's usually monthly moves. This is a 15-minute period, and so on and so forth. Many more. This up period in here, we're looking at 10%. This nice little down red one was 7.62%. Just big moves. And they go up that fast. They go down fast. Now, it looked to me as if it was ready to have this move continue to go forward last night, but it obviously hasn't held the move. You pretty much got a double top formation in place. The neckline majorly supported in that of the 1320 or so handle. But for me, there's been no trading since I had my original sale when it first risen to that peak, which makes a lot of sense. And then selling here, unless you're doing small sales or you're doing multiple Bitcoin cost averaging, which I was considering doing with this. And what I mean by Bitcoin cost averaging is, say I want to sell it up to like wherever. I always want to sell it up higher. Well, I'll sell some at 1463, then at 1507, then at 1544, and you just keep on doing basis points up. So no matter what happens when the move comes into play, you're going to get a piece of it, but you're really going to get the average of a point A to a point B move. So if you start selling at 1464, you get the average of that to like 1680. So you get a sell average of 1500 and something. But for me, when I look at this, why was it obvious that I didn't buy back? And of course, even if I did buy back, why wouldn't have sold on the way up? And the answer is pretty obvious. Did it come back to where it came from? Yeah, like last night. Deep into where it came from? No, it didn't go anywhere near the 18 average of lows. It didn't really touch this major key level of 1200, hence where the buy order from you actually is, a hair above 1200. And then if it did again, I'm looking to sell below this previous high, which it technically did, but a little too much below. If you're doing a very large, noticeable, decent one below, you would have been matching this high, so you could have done 1600 and anywhere up to 16 and a half, it would have worked. Let me take a look at this a little more further. It took to lift off from 500. The amount of time duration of about, uh, we'll go the end of the year. Yeah, the rest of the entire year. 3 months. And that's the whole point about the crypto game. It offers you what I've called from day one in looking at this trading market turbo trading on steroids, I guess is a way of putting it. As in, I'm going to use a reference to poker. And when you're playing poker and you're playing online versus playing live, what you're going to be able to notice that you can do is two things. Well, lots of things, but two things that I want to talk about. Number one, you can play lower stakes, and even the big stakes as well, compared to what you would play at your live casino. And we'll even discount the fact you'll probably get better rake than you do there, but. And yeah, no, I'm not going to discount that. No, I want to count that now that I'm seeing where I'm going on this. Yeah, you got cheaper rake on the internet. So you play a poker tournament on an online site, $500 plus $30 or 25. We'll say $35 rake. Yet at the live casino, it's $60 rake. You play your 2-5 game at the casino and they pull off like $3 or $4 rake, $5 rake. Yet at your online casino, they pull $1 or $2 off. Okay, so the rake is better in that way. You can play for the lower stakes if you so desire to do so. And you can also play a lot more hands. They'd even throw these games on online poker that every single time you don't want to play the hand anymore, you could fold, they'd automatically put you in a new room, and they would deal you a hand of cards instantly. So you could literally play hundreds and hundreds and hundreds and hundreds of hands an hour. Well, I think I was able to do multiple hundreds, 400 or 500 hands, 600 hands an hour, easy back in the day. So you can get more volatility, more movement, more action. Or another way of putting it is you can play like a year's worth of poker grinding that the other pros will do at their casinos in a couple or 3 days. And that is like OMG, that's just getting it done fast because, well, I mean, if you're talking about doing a 40 or 50-year trading cycle, that's your entire life of trading. When you talk about like the S&P 500, you talk about like IBM from 1984, and that's that. But in the crypto game, 20, 30 years in cryptos can be done in less than 20 or 30 months. And in some cases, like 8 months and 6 months. And again, like I was showing, what can happen in a month can happen intraday, or multiple months happens intraday with a lot of these movements. And when we take a look at things like silver, which is one of the more higher volatile overall markets available in the traditional market, although there's definitely more, and there's even some good stocks that are like crypto, so I can't rule some of them out. But when you have situations like this where silver goes from $4 and change in 2002, so this is now a span of 17 years in total, and then it goes up to 50, now back down to, we'll say, 15 and change. How many times have you seen a crypto market go from, say, 4,100 Satoshi, or we'll say 411 Satoshi, which either way, and then have your nice little 12x move, 11x move, and then pull back, go from close to 5,000 Satoshi down to, say, 1,500, or 500 down to 150. That's normal, everyday kind of stuff. For even extra bytes or XBY, it had a high of 5,600-ish or so about 14 months ago. 5,600 Satoshi, and it came from, and this would have been the equivalency of 405 Satoshi. Well, it was 200 Satoshi 6 weeks before it hit that point. And currently it's trading in at about 300 Satoshi, 250. Here's a quick example of Veritcoin going from about 3,000 Satoshi up to about 90,000 Satoshi. 30x move, and then to go from 90,000 Satoshi, it's currently in at 12,000. It's been a little lower. And that move was a smaller move than the 2015 one as well, when it went from 2,300 up to, it looks like a third of a million. Everyday 100x move, and that's not an everyday move. But technically speaking, if you look back at cryptos, if you really, if you take a few hours, you could probably find many dozens, not many dozens, but many handfuls, or getting into your third hand over 10 situations where markets have had that kind of gain, especially priced in against the US dollar. And as we can see on that, this was in the 2015 lows. I can see 005. It was a half of 1 penny. For something that's priced at that to go up 100 times, that wouldn't be going to $5. That would be going to 50 cents. So this move to here, it took for it to have a 100x move. Well, let's just look at this on the daily so I can see. A weekly will work. How long did it take for it to have its 100x move back then? This thing started off at like, to go from here to here. Well, this was basically May of 15, and this was June. It took a month. It took a month, a little over a month. Maybe it should be 2 months. But if you're looking at the weekly here, 1, 2, 3, 4, 5, 6 month and a half. Now just think about that. 1.5 months, 6 weeks, 100x move. But as it plays out, the entire move from here to here, if 50 cents is a 100x move, but then what would $5 allocate, which it did get to? Well, that of a 1,000x move. And in looking at the Dow Jones, how long did it take for its 100x move? It's currently priced at 25.5, so 255. Okay, well, where's 255 on here? Somewhere around here. So 1951, 1950. Okay. 60 years plus it took for the Dow Jones to have a 100x move. For the Dow Jones to have a 1000x move. We have lows of 40 units. So that means it's got to get up to 40,000. And if it does it before 2032, it'll do it in under 100 years. Thank you for tuning in. Have yourself a great day. Bye-bye.